may be the most single important narrative in all of crypto right now, for sure in all of decentralized finance. And I'm going to show you how to capitalize on a trend that is happening, that is going to continue to happen. And knowing this will likely, you'll be able to really capture some huge gains that I think will have really, really limited downside risk. So make sure that you pay attention. So with that all being said, what I want to talk to you about today is about stablecoins, okay? And there is a hot trend in algorithmic stablecoins. Now, just to bring you back here, I want to make sure that everyone's on the same page. Obviously, stablecoins, they're pegged 1-to-1 to the US dollar. One stablecoin equals $1. You probably all know that. Now, not everyone is familiar with the way that these different stablecoins work. So one is there is fiat-backed stablecoins, and fiat-backed stablecoins are things like USDT. This is things like USDC and things like BUSD, which are all very, very popular stable coins that we all know of. And the way that these work is that these stable coins must have at least like $1 in reserves backing these stable coins. So essentially for every $1 worth of USDT, there needs to be $1 held in cash reserves or cash equivalent reserves. So this is the way that this works, okay? This is the way that their backing works, is how they're able to maintain their 1-to-1 peg. The downfall is that all of these are quite centralized. USDT is from a company called Tether. USDC is created by Coinbase. BUSD created by Binance, right? Now, the other sort of type of stablecoin is a crypto-backed stablecoins, which would be examples of something like DAI. And it works similarly, except for it needs to have like $1 in crypto reserves in order to mint one DAI, essentially, okay? And so that's how they hold their peg, is they have at least equivalent amount of crypto backing this particular stablecoin. Now, the most interesting one, and the one that we're going to spend time talking about today, is actually something called algorithmic stablecoins, which you've probably heard me talk about on this channel. And I want to show you a couple interesting developments, and I want to show you how you can totally cash out on this and make a bunch of money. So algorithmic stablecoins, the most popular one by far is UST. This is Terra. And essentially the way that it maintains its 1-to-1 peg is anytime that UST is minted, okay, if $1 worth of UST is minted, then their native cryptocurrency, Luna, is burned, okay? And this is the way that it maintains peg. And if we know anything about this, about watching this sort of price action, as more demand comes for this algorithmic stablecoin, that puts supply pressure downwards on Luna, and we've seen price absolutely explode. And now let me explain why this is important, because history tends to repeat itself, right? So if we look at Luna here, it's currently the number 8th largest cryptocurrency, has a total market cap of $35 billion here. And if we take a look at, for example, UST, it is also in the top 15 now. It just passed BUSD, which UST has just continued to grow and grow and grow and grow in adoption. And I think a lot of people like this because it is a more decentralized stable coin than something like USDT, which there's a lot of FUD around USDT, whether their reserves are legit or not. It's also a Chinese company, supposedly. So this is why people are attracted to this sort of scenario. Now, if we take a look at just what's happened with price, I mean, Luna has been like the best play. Like, it's been a rocket ship ever since UST came out and more demand started to come for UST. More Luna burned, and that created this pressure on Luna. And as you can see, the price has just skyrocketed. It's been an amazing trade. You've probably heard me talk about UST and Luna quite a bit. If you're new here, the reason for the demand is a lot because of Anchor, right? Because you can deposit your UST here, earn 20% yield on your stablecoin UST, which, by the way, this is likely going to come down to 18% next month, but still really, really amazing. So this demand has caused Luna to go like this. Now, so what's happening here is people are seeing the success of Luna and UST, and now other blockchains, other layer 1 blockchains are coming out with their own algorithmic stablecoins, which is interesting. So if you just take a look at Near, for example, which is another layer 1 blockchain, they're coming out with their own protocol, USN, which is supposed to come out like any day, like this week. And supposedly there's rumors that they're going to have an Anchor-like protocol that has a 20% yield for their new stablecoin, okay? And it's kind of interesting timing, right? Right as Anchor is reducing theirs from 19%, right? It's going to have to come down to 18%. And essentially the way that that's going to work is it's going to fluctuate 1.5% per month, depending if the yield reserve increases or decreases. But this is interesting, right? And this has been, sort of the hype inside of DeFi is with Near, because this stablecoin is set to launch, and Near has been also a rocket ship. And, despite the rest of the market being down, Near has been really, really, really strong because of this narrative of their stablecoin coming out and potential 20% reserves. Now, again, people are going to flock to this stablecoin. It's called USN, by the way. And if they can go get 20%, then the demand is likely to stay high, which will put pressure again on the Near price to move upwards, right? Because the supply will decrease. So this is all good and well. And I'm sure, if you guys are in the DeFi world, you've probably seen this. But then just today, we get this announcement from Justin Sun, which he's basically going to imitate Terra and launch their own algorithmic stablecoin called USDD and raise a reserve of $10 billion. The TRON DAO reserve will set its basic reserve-free interest rate to 30% per annum. So he says risk-free interest rate to 30% per annum. So this is nuts, right? And you can see more about this in this little article here on justinsun.com. Basically, Tron, another blockchain that's been around for a long time, and nothing's happened. It's been boring. It's dead. Nobody uses it. Nobody talks about it, as you can see here. And then look what happens. Boom. Just today, they get a freaking rocket ship candle here, 15% candle. And I would expect that, if this development actually happens, and people are able to get the 30% yield, then this could be like something that turns around this entire blockchain. And so I don't think that holding Near or Tron at this point is a bad idea at any means. And we know that how the market is responding to this. So we can see that whenever this happens, a new algorithmic stablecoin comes out, if they have this sort of attractive place for people to park their stable coins and get yield on it, then this could be a really, really good sign. Now, before I give my concluding thoughts on how to actually implement this, if you're new, I created this course. If you just go to www.blueedgecrypto.com/DeFi, and you can learn everything that you need to know about decentralized finance, how we find the best yield opportunities, all of that from A to Z. So beginner to knowing pretty much more than 99% of people. You can watch this for free. It's a short course. It should only take you like an hour, but you'll learn pretty much everything you need to do. So go there. Okay. So anyways, this is interesting, right? I think the way to really capitalize on this is there's really attractive opportunities now to park your stable coins, right? 20%, Anchor, 20% supposedly with Near and USN, 30% with USDD and Tron. So I don't know, these blockchains, it seems like they're going to come out with their own algorithmic stablecoins, and maybe they're going to continue to compete. Maybe somebody's going to come out with 35%, maybe somebody's going to come out with 40%. I don't know, but it is something that's really interesting. It's a great place where you could get some yield, but also if other blockchains that are dead, any blockchain really, it makes sense for them to come out with their own algorithmic stablecoin after seeing the success of UST and Luna. Now, with all that being said, I saw some guys tweet, really what it is it's kind of like what was happening with Tesla, right? So Tesla was the first, obviously UST and Luna were the first to do it here. And if we take a look at it, what's happening now in the electric car market, right? The electric car market's hot. Tesla, they saw the success, the model worked, people wanted it, and boom, every car company in the world now has an electric vehicle, right? And they all kind of they have like similar, sort of vibe or similar sort of style for the most part, right? They kind of have this like boxy, edgy look. But besides the point, they're all like, following in Tesla's footsteps. And this has been really actually good for Tesla. And so I think it actually, it is actually going to be good for Luna and UST. I think they have the first movers advantage. They have the network effects. And I think that, it's possible for Near and Tron to, steal some of the market share. I still think that most people will probably flock to UST and Luna just because it's been around the longest. It's the most stable. It's the biggest. So anyways, this is a trend that's happening. It's an important trend that's happening. It's a great trend that's happening. And hopefully by watching this video, you know how to capitalize. We also have a ton of other videos on our channel, so feel free to stick around. We make helpful content to help make your crypto investing and trading easy, lucrative, and fun.